Does it feel that the measures of inflation and the gauges of inflation, the speedometer, for want of a better expression, we need a new one? It's redundant.
Yeah.
And that is why it is so hard for the great and the good at the Fed to discern where inflation is ultimately heading.
No, I think actually, yes, you're right, but I think that's not a major point. So if you look at the actual data and how it gets calculated, it is completely distorted by a million different things. So looking at monthly numbers, it's kind of a nice trend. It doesn't tell you what next year is going to be. But it's possible that next year's inflation is already built in. So that you're looking at this when that's already going to happen. So I'm just a little cautious that thinking that looking at monthly numbers, whether or not they're accurate, is going to tell you what next year is going to bring. So like I said, I think the fiscal stimulus still is high, and it's a global phenomenon.
Yes.
You know, since COVID, a lot of money was spent. There was a lot of QE, and those things are still kind of surging through the system. Models, in my view, don't pick up fat tails. I would put the amount of spending as a fat tail. So, you know, you can build a model that tells you what, you know, with some accuracy might happen if rates go up or down 100 basis points, but not they go up or down 500 basis points.
Particularly on defence expenditure, the remilitarization, we're seeing that in your country, we're seeing that across the world.
Yeah, but it's not just that. It's remilitarization, the restructuring of trade. There's going to be some of that. We don't know exactly how much yet. That's going to be inflationary. The green economy is going to be inflationary. Fiscal spending is inflationary. Commodity prices, if you look at commodities and oil, copper, there's a chance of being short supply down the couple of years from now. So there are a lot of things out there which can drive inflation. But again, not today. You know, I'm talking about 12 months, 24 months from now.
Jamie, is the consumer in trouble? Is something starting to break in the broader economy? And can we say the same for commercial real estate? And have we seen the worst of the stress? What could go wrong given the cycle?
The consumer is in pretty good shape. So unemployment's been below 4% now for a year and a half or 2 years. Wages are going up at the low end, which I think is a very good thing. Okay, and their home prices are up, stock prices are up. Even when we go into recession, they're in pretty good shape. However, their confidence levels are low, and that seems to be mostly because of inflation, et cetera. So they seem to be okay. The extra money from COVID has been coming down. It's still there, at the for the bottom 50%, it's kind of gone. So it's I'm going to call it normal, not bad. For the top 50%, they still have more money. That's true for small businesses. It's true for corporations who funded long. But that does not mean that you won't have issues next year. It just means like right now, yeah, it looks pretty good.
Time is against us, but very quickly, Jamie, could we yet see a hard landing?
Could we actually see one?
Could we?
Of course. I mean, how can anyone reads history say there's no chance?
On that note, we'll leave it there. Jamie, thank you very much indeed for joining us. It's been a pleasure.